the Toronto real estate market going to crash? How was the sales activity in Toronto and the Greater Toronto area for the month of March? And is Bank of Canada going to increase its key lending rate in the next week's announcement? A lot of people have these questions, and in this video, I'm going to talk about all these things, so stay tuned. Hello, this is Sonia, your local realtor with Remax Realty Specialist. Welcome to my channel where we love talking about real estate and all things in and about Greater Toronto area. And we would love to take you along the ride. So hit that subscribe button and the little bell icon so you get notified every time there is a new video uploaded. The Bank of Canada has made it clear that it will hike its benchmark interest rate in the months to come. But exactly how many times and how high is the million-dollar question for borrowers. The Bank of Canada is expected to take an aggressive stance on interest rate hikes, trying to keep up with the US. Most of the banks are now forecasting a 50 basis point hike at the April 13th meeting. This would double the current level and bring it to halfway to the pre-2020 rate. 4 additional 25 basis point hikes are forecasted for the rest of the year, ending at 2%. They believe the Bank of Canada will front-load the tightening with no further moves next year. Before the most recent cuts to the overnight rate, the previous cycle had peaked at 1.75%. If the overnight rate reaches 2% as forecast, it won't just surpass that level, it would hit the highest level since 2008. It will be interesting to see the market react to all these interest rate hikes. Soaring inflation and housing are driving rates higher, but the economy can take it. Canada's economy is more than prepared for higher interest rate. It actually needs it. A multi-decade high for inflation and record home prices growth need friction. Steep inflation growth indicates rates should have been climbing sooner. RBC argues that the fast cycle will be due to falling behind the curve. Now is the time for Bank of Canada to play the catch-up. While economists expect the bank to gradually raise its rate another half dozen times or so this year, there is a growing sense that the bank may need to start moving faster and more dramatically than anticipated to rein in inflation, which is already at the highest level in generation. A tight Greater Toronto area housing market kept home prices elevated in March, with the average selling price of a property clocking in at $1,299,894. However, there were signs the flurry of activity in the red-hot market was starting to ease. The latest data from Toronto Regional Real Estate Board showed that there were 10,955 home sales in March. While that's roughly 17% increase on a monthly basis, home sales in the region fell almost 30% compared to the same time last year. All housing segments saw sales activity fall, led by the low-rise properties. New listings dropped 11.9% year over year, less than the decline seen in sales. Still, the continuation of tight market conditions kept the average selling price hovering at nearly $1.3 million, down only modestly from the record set in February and an increase of 18.5% rise from March last year. While sales were down year over year for all major market segments, market conditions remained very tight. Home buyers did not experience the same level of competition from other buyers compared to a year earlier. The MLS Home Price Index composite benchmark was up by 34.8% year over year in March 2022. The annual rate of increase was down slightly from February. Competition between home buyers in the Greater Toronto area remains very strong in most of the neighborhoods and market segments. However, we did experience more balance in the first quarter of 2022 compared to last year. If this trend continues, it is possible that the pace of the price growth could moderate as we move through the year. The fundamentals such as a strong economy and labor market are helping drive housing activity. Ultra-low interest rates have more so underpinned the market. As rates rise, it will work against the home buyers. The incredibly low interest rates that we have seen have been a boom to housing. So if you play it forward, rising interest rate is going to take the bloom off the rose, so prices are going to be peaking soon and coming off. However, we are not seeing a major pullback. We could see price down 5 to 10% over the next 12 to 24 months. We don't see a crash happening, but again, nobody has the crystal ball. We have very progressive immigration policies with 350,000 immigrants every year, so we don't see prices collapsing. But yes, I think prices are going to come off, and that would be good. As home prices remain out of reach for many, it's widely expected that the federal government will unveil measures aimed at improving housing affordability in its budget next week. And this is it for this week. Don't forget to join me next week. Until then, stay happy and stay safe.